So please welcome our race car driver, Frank Trotter, President Battle Bank. Thanks, Frank.
Boy, that's a long time ago. That's how I put my chemistry degree to work, driving race cars in England, and then, of course, stopped that and became a banker. And I think those are pretty correlated businesses. Now, one of the things here, we're talking about when contrarian becomes consensus. That's kind of our theme of our talk here. We've been talking about, and everybody here has been thinking about, deficits, fiscal policy, monetary policy for really decades. And all of a sudden, we were picking up, large headlines, everything from the Wall Street Journal, New York Times, Financial Times, London Times, all the times, saying, oh my God, there's a fiscal problem, there's a debt problem. So we're going to get into that a little bit. So we're really going to take our community bankers' outlook on all these inflation and some of the other issues that we're talking about. And I think Grant really, of course, set up our viewpoint very well, as he always does. So let's jump into it. Tell me when you're done reading. Okay, thanks. Now, one of the things for the last several years, I saw the show of hands of who's first time here, but for those who've been here for several years, people would walk up to the Battle Bank booth and say, when are you going to open? And we thought about putting a banner up that said, we're still waiting. Well, as you probably know, we are open, and thank you for your patience, for your support, everything else. If any of you want to get into a regulated business, I highly recommend against it. It takes some time to work through some of these things, but we're open. And let me just take a second here. We've been fielding a lot of questions at the booth, and we have 4 of us out there to help you to answer questions, to open accounts. We're doing that, I don't know how many we opened yesterday, but it's well into double digits. But you can just stop by, sit down, we'll go through the account opening process with you. But there are a couple things people have been asking. One, can I open an account? Yes. As of yesterday, we actually opened the bank to the broader world. We had a wait list of 23,000. Rick mentioned that in his opening talks on Monday night. And we worked through that, and it was great. And we've grown well. We've had really very much on plan. And I just noticed from the numbers this morning, it's starting to build that little hockey stick in terms of growth. So thank you all very much. I know, is anybody here a client? You don't have to put your hands up, it's starting to be more, but everybody here should be a client because we do things that people at this conference focus on. Somebody asked me a question at the conference a few years ago and said, what's the ideal client for you? What's your target client? And I said, well, just look to your left, look to your right, look behind you, look in front of you. This is our family. And what we're really doing is building a community bank. It's not defined by geography. It's defined by aspiration and attitude and things we all want to do. So come on into Battle Bank, take a look at everything. We're opening accounts. And the other question people have been asking is, are we going to do another raise? We had our capital was all brought in by early October last year, 2025. Thank you very much. There are a lot of you here that are shareholders. Raised a total of $102 million, which is a number that seemed a little shocking to me, but very nice, and it actually helps us kick off the bank on a very firm footing. But as we grow, banks need capital. And yes, we expect to be going back to the market, and we hope any and all of you will participate in that, particularly current shareholders. Many people have been asking, and hopefully the rest of you who didn't participate the first time around will join in the fun. So let me get to one more commercial before I get to my content. People say, what are you doing at Battle Bank? And I'd like you to come to the booth, but I'll save you a trip if you want to go through this. At the center of everything, everybody out there, who has more than 0% paid on their checking account? There's 1, 2, 3. Okay. Well, our checking account, the high yield cash account, pays 335 APY today, and we expect it. We don't have 10 checking plans with lots of fees on them. We don't have 5 savings plans with different tricks that we play on clients. We have an account. It's your cash account. It pays one of the best rates in the market, and you can do anything you can do in a checking account. You can pay bills, you can do ACH, you can make wires, you can send money in from your broker-dealer. You can do anything you can do in a checking account. It's really simple. And I've been perplexed. I've only been in banking since 1980, and people just don't seem to create accounts like this. Why not make it simple for the client? What a concept. Now, attached to that, anybody here interested in precious metals? That's a layup around here. We do buy, sell, and store precious metals, gold, silver, platinum, and palladium. We do it, I think, at some of the best rates in the market. And I hope you come in and do that with us. Now, there are several other precious metals dealers here, and I certainly encourage you to stay and enjoy their business. They're good friends, they're good partners, they do things right. And so we're not trying to steal their business, but we'd certainly like you to come in and try us out as well. But one of the unique things, and this is something where we're partnering with some of these other precious metals dealers, is you can borrow against your precious metals. They've run up in value, you want to hold on to them, but you have a current need. So what do? A lot of people have to sell them to do that investment, to pay off a debt, to put a deck on the back of the house, be my guest. We just allow you we'll store your metals for you. We'll loan you up to 50% on those metals, and it's a 5-year revolving line of credit. You can go on the website or come out to the booth if you want details. But this is something that has really been exciting for people, and it's interesting. And here's something, we all make projections when you start something. One of the things we didn't see coming is, I think it actually changed for the first time this morning, is we've had more metals delivered than cash in the first 4 months of operation. So what that means is people, in dollar value, people have sent us more gold and silver, platinum and palladium than they've opened checking accounts. And I think that's fabulous both for the shareholders, but also sort of points out what are people thinking about. And many of these folks are thinking about our MELOC, our metals equity line of credit, to borrow against. And we're really excited about that, and we're excited for our clients. Over on the other side, you can make deposits in foreign currencies. Certainly we are open to US and Canada now. I have a lobbyist sitting over here in the front row that thinks we should open in Australia soon, named Carrie. And a number of other folks who have come up to the booth asking us to do it. And we will as soon as we can get the regulations nailed down in those entities. Again, banking is a regulated entity. But if you think about the US dollar or the Canadian dollar, is that going to be a place you want to be in currencies over the next 5 to 10 years? I'll talk about that in that part of our content. But we have over 20 different currencies that you can make a deposit in, either in a current account or a CD. So if you want to hold Canadian dollars, you want to hold Norwegian krone, you want to hold Australian dollars, that's great. Just bring them in and we'll be happy to provide you with an FDIC-insured deposit for that account. And then maybe you have a small business doing international trade. That's a great option for this. And we have some of the best exchange rates in the market. So if you're getting hooked by those big Canadian banks or maybe your US provider, come on in and we'll take care of you. And then finally, and Rick always talks about this, in that when we told him about it, he says that can't be legal. We have self-directed retirement accounts. Marty May is president of our retirement division, is here with us this weekend. And what you can do there is either a solo 401k or a checkbook control IRA. And it allows you to invest in anything that is legal in a retirement account. Now, if you go to Schwab or Fidelity or Vanguard, you can buy stocks, bonds, mutual funds. And that's great. A lot of people do just fine there. But if you want to own real estate, income-producing properties, private equity, hard money loans, crypto, come on in. This is a place to do it. Anything that is legal in those IRAs or in those solo 401ks. And solo 401k, if you're a 1099 person, allows you to protect even more income than a solo or an IRA. So please come in, look at the details, and we certainly suggest you take a look. So now the commercial's over. You can come back to your regular scheduled programming. Back in April, and we're doing a position paper monthly. So if you want to get on that mailing list, definitely come in and sign up, info@battlebank.com. But we did a position paper where we sort of stepped back. Like a number of the speakers here today, I'm not a short-term trader, not a short-term predictor. I sort of try to stand back and think about what's going to happen or what I think is going to happen over a longer period of time. So we put together a paper called The Coming North American Decade, where we covered a lot of different items. And it's really a focus on both US and Canada, but through the lens of the US economy. Looking forward over the next 10 years, how is this all going to play out? So we really think there are 5 items. And by the way, I'm going to get Grant Williams, PowerPoint guy, to work with us. Boy, wasn't that good? 5 forces that we see coming up over the next decade. One is, we kind of call it permanent inflation. There's some other writers that have been talking about it in that sense. It's funny, when was the last time the Fed hit their 2% inflation target? Yes, correct, never. And this is just going to keep going and going and going and going. Grant made the case as to why the politicians are going to continue. You're going to hear other speakers make the same case. But inflation is here and it isn't going away. I think the fiscal status is pretty obvious. I'm going to go through it in a slightly different approach than I think you hear from a lot of other speakers, but it's there. We're running a massive deficit. It's not going to stop. And it just builds the debt and the interest as a result. No matter what the rate, becomes more and more difficult to deal with. I think a lot of people are also talking about the easy money in tech. Obviously, if you've been an AI investor over the last couple of years, you're loving life. But that easy money may be going away. It's obviously the headlines this morning on Bloomberg and others were faltering prices due to mixed earnings. And of course, so many of these companies don't have any earnings. So that makes the valuation even more difficult. Tangible assets. Do I have to remind everybody here in this audience that tangible assets like gold, silver, copper, and others make some sense? I think that's probably pretty straightforward. And then within a K-shaped economy, we really have a very different approach to real versus nominal prosperity. Somebody will say, well, my salary's increased by X% over the last 10 years. Well, great, but it's now Y% behind inflation, and certainly Y% behind what you're spending, even if the inflation rate's nominally measured at 4% or so. So let's get into this. So seems like normal, and I'm using 2025 fiscal year since you have a whole year of data to back this up. Big economy. Not too long ago we were talking about a 10 or 15 trillion dollar U.S. Economy. That's what inflation does. For the year last year, 2.2%. And one of our friends writes and has studied all this, and it doesn't really matter, it seems like, what political group is at the top of the heap. They all promise massive growth, and it ends up at 2 to 3%. Over and over and over again. It doesn't matter if it's supply or whatever side, it comes back to that. And of course, at the end of last year, that was declining. And does this make us go towards that stagflation? I don't think we're going to get to the 70s. That was a pretty awful period. But we could get down that direction, but just at a lower level. Now, let's break apart what the economy does. Now, there's 2 different measures. GDP is the one we all think about. And of course, last year, 2.2 for the year. And here's how it kind of all breaks out. It's about consumer spending. Almost 70% of GDP is all of us buying stuff. Paying for the hotel certainly raised my costs here, but consumer spending's there. Private investment, government are about the same. And it's important to note that when you talk about government, this does not include transfer payments or interest. That gets wiped off of GDP. So, but that ends up in consumer spending. If you write a check to a consumer for one thing or another, it ends up as something that they spent money on. And there's been a lot of talk about exports, of course. It's kind of a political football right now. At least in my 2 cents, that's kind of a rounding error, 2.9% of GDP, and probably not a lot to be paying much attention to. But if you think about the budget and some of the things going forward, can GDP go up significantly over the next year? I think it could. And it's not about Germany, but if you think about it, their GDP in the 30s looked pretty damn good. They were building tanks and planes and bombs and all sorts of stuff. And if I last recall, the defense or war budget, whichever it is this week, is going to go from 0.9 trillion to 1.5 trillion. That's going to leak through to GDP and probably look good, but probably isn't productive, the two different things. So let's go a little bit, one more thing. Gross output is different. GDP measures really consumption. Gross output measures what businesses create. And gross output, as opposed to GDP, has been declining. It was actually negative in the fourth quarter last year and nominal, about 1.7% in the first quarter this year. And that really measures differently how we measure the total economy. It's what businesses sell to one another, to one another, to one another. If you're familiar with VAT, it's kind of the underlying principles that they tax on in some of the VAT countries. And that is declining, and I think that could be a measure of what we're going to look like going forward. Now, most of you are familiar with the right box, which is what we all talk about, spending. We don't pay a bunch of attention to the left side, which is what the government gets, steals, whatever you like to say. So income taxes, payroll taxes, which are typically for Social Security and other things, corporate and tariffs and excise, and you can see all the lists there. And of course, we come up here in 2025 with a 1.8 trillion deficit, massive. And we all sort of step back and go, I cannot believe how big that is, but it's going to get bigger. It's really worrisome, but when you really pick apart the budget, it's going to, even the CBO, which is theoretically independent, right? The CBO director was appointed in 2019, reappointed in 2023. And it's jointly appointed by the House and the Senate, and they employ professionals as opposed to political appointees. We'll see how long that lasts. But even they are feeling that by 2036, we're going to be running at about a $3 trillion deficit based on current budget items. That is nothing new. That new budget for the Defense Department, no. They do incorporate things like growing debt service. And debt service could be the largest part of the budget in 10 years. Rick talked earlier about rates rising as a possibility. We think that's certainly possible as more debt out there. Guess what? Price drives people wanting to invest. That could go from 2 to 3 to 4 trillion relatively rapidly. And for those of you who think rates today are high, I come from a different era. When I started banking in 81, you may recall prime was at 21.5. The 10-year U.S. Treasury was at 15%, and T-bills were paying 18%. Now, overlay that on today's budget, and things get exciting. Just as a side note. But one of the things, as we look at the budget, everybody screams and hollers. The president did the other day, says we have to stop this spending on Social Security. It's the biggest thing in the budget. Well, is it? What's interesting is if you take a look at the payments in for Social Security, and they're not an investment, they are a payment for current recipients. It's actually only a $140 billion difference. It's one of the smallest parts of the budget. It's one of the highest political parts. It's one of the smallest budget parts. But it just isn't. It's about, so Social Security, honestly, is 1.99%, 2% of the total budget. And let's be honest. Should I be getting Social Security? Really? it's a safety net. If you're going to have it at all, and we can politically debate whether that should be there at all, but if you have it, don't give it to me and probably don't give it to 80% of the people in the room. No longer a deficit day one when you do that. Maybe raise the age. There's some simple things that nobody's going to vote for, but could solve that problem. Medicare, on the other hand, is almost $1 trillion a year. That's a tough one to get out of the way of. But that's the sort of net interest and Medicare sort of run hand in hand in terms of the total budget. And this isn't going to get solved anytime soon, and so we feel that this deficit will continue to build, and that will have implications on some of the market. Now, if you look at the far left of this graph, you'll see a bar that goes down. Is anybody familiar with a budget surplus, the term? That was our last one in 1999. Quick and dirty, and that's how it's measured. Yes, I know all the unfunded liabilities and so on, but each of those blue lines is a presidential shift, an administration shift. And you can see basically that until 2008, it was interesting when we did some analysis around 2010, the George W. Bush administration created the largest percentage increase in deficit that had ever been known. Well, he's getting away scot-free these days, because after 2008, although that was actually his last budget, that large number in 2009, things got out of control, and then after 2016 and 2020, it's just Katie bar the door. It is going up, 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 and it isn't coming down. So it runs through every layer of government. We all talk about the national government. Anybody here live in a state or a province? Yes. So California has the largest gross debt burden, of course, largest state. New York, big surprise, second. Illinois, even bigger surprise, third. But if you think about per capita, I just list the top three, but you have places like Wyoming's in the top 5 in debt burden per capita. State governments are not in great shape either, so who's going to pick up that bill? Now, let's go to cities. Now, this doesn't look at debt because they all account for this differently. But the U.S. cities budgets total $2.3 trillion. And here's the most astounding one, is New York's cities budget is $126 billion for this year. That is more than 47 states in total budget size. And I don't know about you, but I don't think they're getting value for their money. I just soon not set foot there, but I know other people like it, so whatever. But look at the per capita, of course, is kind of where we would expect. All this is going to come home to roost. Big surprise. Permanent inflation. Why won't it come back? Last year, through May was about PCE was 3.4. Obviously, we had a headline over 4%. I'm not going to focus on the run-up in the 90 days or 120 days or however long it takes to get out of Iran. But looking at it in the longer run, it's probably measured at 3 or 4%. But our view, frankly, is that it's 8 to 9%. And I'll challenge any of you to say that it's much lower than that for what you spend. And is this part of the K economy? Yes. But if you look at things that are going up, they're going up rapidly, and they're going up across the board. Ground beef's a funny thing. I did a piece on LinkedIn the other day you might want to look at. We happen to have a cattle farm. And I've always wondered why what I got at the sale barn didn't look like what I was paying at the grocery store. There's a lot of different elements going on here, mostly about supply. There's that old supply and demand. It's not some meat packer taking advantage of anybody. It's supply and demand. But people have shifted their buying, as you probably know. And ground beef's still up almost 100% over the last 5 years. Inflation is here. It's going to be permanent. It's here to stay. So just to reiterate it, the deficit, spending, tariffs are not inherently, everything to do with inflation has to do with money supply in the long run. But you can have shocks that are produced by things like tariffs. And then the Fed would love to monetize all this debt, but they're going to be trapped because they have an inflation imperative as well. So what are they going to do? We really don't know where Walsh is going to take things. We think he's going to be conservative. You would have expected a drop in the Fed funds rate at the last meeting just because of the way the political appointments worked. But good for him, he kept it there, and it probably needs to go up. That is a situation that's going to really play out interestingly as we hit first 40 trillion and then move on to 40, 45, and so on. I do want to talk a little bit about currencies, and I'll invoke somebody who generally doesn't sound alarmist. Well, Warren here, and I'm going to read this one. Generally, I'm going to let you read your own slides. You wouldn't want to be owning anything we thought was a currency, in anything that was in a currency we thought was going to hell. And that's the biggest thing to worry about, the United States currency. And this is from Mr. Optimism. He is very concerned about where the USD is going to go, and so are we. So again, some of these things we're coming back to. Public debt in the US is close to 100%. If you look at a nice color map of the world, we are in there with some of those great economies, mostly in Africa and South America, not with Europe, China, or anywhere, or Australia. And this is just going to continue to be an erosive element. What's gone on with the US dollar? Grant mentioned that first half of last year was a big down period in the US dollar. Well, this is the full 2025. Euro was up 13%. Swiss franc was up. Norwegian kroner, which is really just an oil company named a country, was up significantly. And that was great for 2025, the first time in a long time that the US dollar had declined massively. And what's it done this year? We'll just go meh. Obviously, the Iran war has played out significantly in this. The euro's decline over the last 6 weeks has been a headline, but guess what? Norway, when oil prices go up, Norway goes up. And Australian dollar, we'll chide our friends in Australia a little bit, say it's really just a big mine. A large one, by the way, but when commodity prices go up, they have certainly some of their own political problems. We think that might be a successful place to be. So when we're looking at places to diversify, and just by the way, the folks that have already invested with Battle Bank in currencies have focused primarily on the Norwegian kroner. Obviously backed by a huge sovereign wealth fund. You have all the petroleum that the country produces that keeps them up and running. Commodity currencies, you can pick Australia, you can pick some of the others. A lot of the South American currencies with good mining prospects really don't trade effectively. And we think actually some euro exposure, despite all their problems, might be something you would consider. And of course, as I mentioned up front, we offer 20 different currencies, so it's up to you to choose. And yes, we do talk about gold. You're going to hear so much about gold that I kind of underemphasize this, but you just believe me, we believe in gold. But it is the anchor. You have Rick, you have silver confirming that, we have platinum at 17-year highs. And as Grant said, when the price of gold goes up, that just means the value of your dollar went down, or your currency, whatever currency that happens to be. And we think a strong allocation, even Morgan Stanley came out and said instead of a 60-40 portfolio, you should be in a 60-20-20 portfolio. 60% stocks, 20% bonds, 20% gold. And we're all for that. So bringing it home here, I'm just going to skip a little bit to stay on time so Carrie doesn't hit me. We're here to battle for better. Come by the booth, open an account, talk to us about some of our viewpoints. And in this decade of inflation, the things that are the best things, scarcest things, are assets that governments cannot manufacture. Precious metals, commodities, and all the things that go around there. So thank you very much. Join us at Battle, and we'll see you down the road.